Hello there, this is fairbinary.options.com, and we are looking at the euro US dollar on a day that seems to be finally the day that the price is breaking higher, or at least it looks like that at this very moment of time. I would like to point out here that this is a 4-hour chart on the euro US dollar, and while let's say a lot of people are still thinking of shorting the pair, I would say that these are levels that you don't want to be short, so you don't want to look on the short side. The problem is that this triangle here, this highs in this contracting triangle here, not the highs here, but when the triangle ended here, they were broken. So this is the real break, or this is the break that everybody was looking for, not the one here on 39.66, because the previous wave, this wave here, ended here with this triangle. So with this wave ending with this triangle here, it means that let's say the resistance is not there anymore, and the market, mark my words, will go and break and grab those highs too. I mean, there is only something like 20 pips until that level. What I'm trying to say is that the whole move here to the downside seems to be a contracting triangle, that actually broke higher. So from here you are having, or we are having, where A here, B here, C, D, and then the E wave here. This is the contracting triangle that I'm looking at. Let's change the color for it. And more importantly, if you take these trend lines from here, so this to be the A and C trend line like this, and of course this to be the B and D trend line, like this, then I would say we are in for quite some road for the euro US dollar. If you are looking at the end of the previous move, or the length of the previous move is actually only this one here. So it started, take a look here, it started from here, it ended here, and this is the let's say the levels that were broken. What I'm trying to say is that the 140 is not mandatory, but is there, and by the time market participants will try to short this pair some more, get let's say that they will get margin calls being triggered, stops are being closed by brokers, and in order to close a short position you need to go and go long. So new bulls will join the party, and next thing you know, the 140 is going to be broken. Now I don't know if it's going to be broken today. Keep in mind the ECB is coming this week, so it will try to put some let's say cold water on the steam, but on the fire. But until the ECB, there are still 2 trading days, and I would say that the market will force bears to the extreme. So what I would like to do here on this break of this trend line, what I would like to do actually is to go and buy call options, and to keep my call options including after the ECB. So I like to have an expiration date that is end of week expiration date. So let's write here that my plan, or the plan, is to buy call options with end of week expiration date, in order to avoid the volatility provided by ECB next Thursday. As you can see on the euro US dollar, by the time we had the break higher, nothing really stood in the way. This breaks higher comes after a staggering services PMI in Spain. Now Spain is a service-based economy, and this services PMIs in Spain showing that once the trouble kid of Europe after Greece, it is recovering, and it is virtually impossible for the ECB or the central bank to come next Thursday, and not to acknowledge or not to take into consideration the improvements in the European economy. The overall PMIs in Europe came better than expectations. It was confirmed in UK as well. So only bad news for the US dollar. You might think that this is a euro related move. It is not, or it doesn't seem to be a euro related move, because markets actually are selling the US dollar across the board. Look at the US dollar Japanese yen, look at the Great Britain pound US dollar, look at the US dollar Swiss franc, US dollar Canadian dollar. So the US dollar is suffering, and this might be the move or the break many expected for quite some time to happen, including myself here. Well, that is the analysis for today. I'm still, even though it seems that the striking price is so high, it seems that I am basically buying the call option at so high and expensive level. Well, I'm not buying at higher levels. I'm buying strength, and strength means momentum for the pair, and this momentum ideally should be enough in order for the option to expire in the money. Thank you very much for being here. This is fairbuynowyoptions.com, and all these analysis and recommendations are possible due to the help of our sponsor here, Lion Eye. Bye bye.